Interest rates on student loans are about to hit their highest point in more than 10 years. The move makes a difficult financial burden even harder to bear. So joining us now to discuss this development is Craig Bolanos, the CEO of Wealth Management Group. Craig, thanks for joining us today.
No, you're welcome. I shouldn't be smiling. It's just getting tough out there.
It is, especially, it's so hard. It's out of reach for so many kids as it is right now. But now they added this little extra bit on. Why are the interest rates going up?
Well, the interest rates are going up because we had to start fighting inflation. And the way we fight inflation in this country is by raising the cost to borrow. And as a result, we're going to have undergraduate loans priced at 6.5%, graduate loans being borrowed now at 8%, and the highly coveted Parent Plus loan that parents all across America use to help their kids go to school. That's no longer an 8% cost to borrow. It's going to 9.08. It's getting pretty steep, isn't it, Micah?
It is. This is a stupid question. Why can't they put student loans in a different category where the interest rates never go up? They just kind of stay the same.
You know what? It would be great, but that would mean you and I would need to be elected officials, not in the business of broadcasting.
Shoot.
And at least I can say this. It's not subjective. It's very quantitative. Whatever the rate on the government bond is in the month of May, that's what's going to set the rate for borrowing for all of 24 and all of 25. So everyone who's going to be sending their kids to school come this fall, just know it's going to be more expensive to borrow, which is why we need to be informed about it. And then we need to be very intentional with our decisions.
How is this going to affect those graduating now?
Well, the good news is when you borrow on a federal student loan, those interest rates are fixed for the life of the loan. So students who were freshmen during the pandemic, they were literally borrowing at less than 3%. And then when they were sophomores and juniors, they were borrowing at 5%. So it's not going to affect those who are graduating now. This is only affecting those who are first going to be borrowing this fall. That's who's going to pay this higher price.
Well, how does this affect the President Biden saying that he's forgiving all these student loans? Will that be affected in any way?
You know, I think they're mutually exclusive, but it shows a theme that resonates in America. The student loans are an avalanche issue. Getting empowered through education is becoming further and further out of reach. And the further things get out of reach, the more tempting it is for those who are in leadership to want to provide a cure. So I think these higher interest rates are going to make it all that more popular to continue to find ways for student loan relief. Now, whether that popularity is actually eligible to be done within the laws and the construct, I'll leave that up to SCOTUS, the Supreme Court. We'll let that be debated in the end.
Is there any way students can combat this?
I think it's just the simple part. I think we need to really make sure there's great value. I think we need to make sure that we're going to schools that are going to be affordable. And then I think for everybody who has existing loans, who's graduating and is going to be making payments, really make sure you don't put yourself into credit card debt while you go through the struggle of rent, auto, insurance. And there's various loan modification programs that are out there, income-driven repayment plans that people can use. At the end of the day, I think, Micah, it's all about getting advice. That's what people are watching us right now. Yeah. And that's what I want people to do. If they have questions, go get the advice so you can make sound choices for yourself and your family.
Craig Bolanos, thank you so much. CEO of Wealth Management Group, lots of good advice. Appreciate it.
Good to be with you.